Dan Deming of KKM Financial. And Dan, great to have you on the show.
Thanks, Angie. As
we enter a new week of trading here. So, first question, did you expect BREXIT to happen?
No. I mean, certainly, it's very, very rare when you see the market get something wrong like that. That's an anomaly. I mean, basically, going into Friday, the expectations were on the close on Thursday that they were going to stay. All the polls indicated that. The unique thing is that there are no exit polls, during that referendum. So, they were basically basing it on what people were saying before they went in. They didn't get a chance to talk to them when they came out. So, that shifted very dramatically last week, and we saw the escalation of that into Friday. Certainly the market reacted very, very negatively.
It's so true. The stock market was rallying, and the pound was up, and the gambling people were saying,
yeah,
not going
the odds
to happen.
makers.
Everybody was wrong.
Very,
and
very
you said
rare.
This is really an anomaly that's happened here. So does that change your trading strategy?
Well, it certainly changes the landscape moving forward. When you look at how the market reacted and probably what the expectations are, that the market did not have this priced in. And you saw that by the reaction that we saw on Friday. So, yeah, I think that's going to continue to play out. The uncertainty level now has been escalated, at least for the next month, if possibly longer. The unique thing about this, Angie, is the fact that this is a political event which is going to most likely have economic implications, but it's not purely an economic event like we saw like with a Lehman collapse or something like that. So it's going to take time for this to kind of filter out, to really decipher what the real economic impact is going to be. But certainly on the surface, it does not look particularly positive for the short term.
And we are seeing that money scamper into safe haven plays. So what are some of the safe havens where you're seeing rallies, because that's where people want to house money in case something more massive happens?
Yeah, if there's a further dislocation in other areas. So the areas of strength are right now are looking at the utility sector continues to shine, given the fact that it's got some stability. That pays a lot of those names pay out a nice dividend, so people are looking for yield. That's where a lot of money, you see money flowing into that space, as well as defensive measures like gold, the commodity. I mean, certainly no one really knows the true value of some of these currencies right now. It's destabilized the entire currency world. We're seeing flows into the Japanese yen, the US dollar, huge moves on Friday, and gold as well. It's just kind of rotating out of the euro, rotating out of some of those names that you think might be vulnerable moving forward.
What would you be doing from here?
I think, defensively positioned has been the theme. My mantra over the last 6 months or so certainly have, the valuations I was questioning. We weren't seeing real growth, and productivity was kind of coming in as well. So, moving forward, I'm looking at being defensive, and especially if you break 2050. I'll close with this. A unique thing about last week, Angie, is the fact that really, overall, we didn't give up that much ground. We basically closed down a little bit for the week. So 2050 on the SPX is going to shift the way I think about the markets. If we break through there, that would confirm a further downtrend potentially, and we see us break down to that 200-day moving average, which is about 2,000 on the S&P 500.
And then the bounce market is what?
The bounce market would be that 200-day moving average first. If we break 2050, I could see hopefully holding that 200-day moving average, which is just above the 2,000 level. Below there, 1950 would be the next stop.
Okay, thank you, Dan.
All right, thanks, Angie.